Good morning. Welcome to the XM.com weekly market update. We're joined again by Pete McGuire, the CEO of XM. Pete, good morning.
Good morning, Andrew.
Once again, plenty of activity, plenty
Wow.
of data.
What a week it was.
What a week. We'll touch on the UK and China shortly because there's a huge amount of activity happening there. But firstly, domestically, unemployment rate came out again last week, 3.5, very low number. But as
You want a job, you get a job.
Very much so. And that's what we've seen for a long time now. And I think just out on the street, there's just so many opportunities available.
Every coffee shop you go to, they're after a barista. Every pub you go to, they want a barman or a bar lady or someone. That service industry is just exploding.
And I think as people are more getting back out to socialise and eat out, unfortunately, the downside of that is the shortage of workers.
Yeah, and you can't complain at a restaurant, which you shouldn't anyway, but the old story, well, we've got 4 people doing 6 people's job. Yep. We can't get staff, so it might take an extra 20 minutes to get served.
Yeah, it makes it tough. I think it'll be interesting to see where that leads to. If the immigration starts picking up again, which obviously the government wants, that may alleviate some of that problems, but it takes a long time to flow. Yeah, it takes quite a long time to flow through.
Yeah, well, you've got to be qualified also to be able to do the role.
Yeah. They'll need to get those uni students back in quickly. So
the
CPI, that comes out this week as well in Australia. So the 6.1 was the last number. Yep. They're anticipating 7% this time around, which is quite a jump up.
Well, it's 15% jump.
Yeah, but not unexpected.
No, not unexpected, but I'm looking forward to see where we are by Christmas because it's coming out as a monthly metric. And are we going to be approaching that 8.5 number by Christmas? And that's really going to put some pressure on the RBA and the whole, I think, our economy overall.
Yeah, they might go back to the 50 basis point rises by that stage, but we'll wait and see what this number comes out, first of all, later this week.
Sure.
Moving up to China, plenty of activity up there with the National Congress, Xi Jinping cementing his power.
Yeah, Hu Jintao frog marched out.
Yes, I know, it was very interesting to watch. But this is a 30-year chart, so it gives you an idea. I think ignoring the pandemic, because that's like a massive swing there, but it just goes to show how strong it was for such a long period of time.
Oh, yes.
Yet the latest number came out at about 3.5%. They were anticipating 5.5%.
Yeah, so 40% down.
It's a big difference, and which is not surprising considering how the country is being run at the moment re-COVID.
Yeah, exactly right. And the CSI 300, just to give you an overview from a market perspective, it was at about 5,800 going back 2 years ago. Now it's at 3,600. Had a big washout yesterday, down 3%. Hong Kong was down nearly 7%. So that was the overall feeling from Xi's another 5-year roll, the impact it's having to markets.
Yeah, and I don't think, not that they can do much about it, but I suspect the people in Hong Kong wouldn't have been too happy with what they heard.
Well, they're not happy, but the real frightened ones, I'm sure, are going to be the Taiwanese.
Yeah, well, that's true, yes. And the unemployment rate came out as well. It's only jumped slightly, 5.5. But once again, that's not surprising considering most of the country is still in lockdown. So
yes. It's a big number on 1.4 billion.
Yeah, it is, yes. So,
and that creates unrest.
Certainly does. And it sounds like there's plenty of unrest up there at the moment, particularly in the property market. So
90 million apartments uninhabited.
Right.
90 million.
Oh, no. Big number.
And $62 trillion worth of value is the Chinese property market. It accounts for about 31% of the overall economy.
Wow.
So it's an enormous segment, and we all understand what's going on with developers and the impact. You've got a very, very weak yuan being smashed to the downside against that US dollar. So they've got some problems, mate. They've got some problems. It's who's holding the debt's got the problem.
Yeah, well, that's true. Moving to another area that's got a few problems. The Eurozone, we look at the Euro there, and you look at the trade balance, which is a massive negative number.
Yeah, it's in tandem with the Euro.
It is.
And it just seems to be a continual free fall, that trade balance, and the euro is still sitting at that 97, 98 handle against the US dollar. It's back at 112, the US dollar this morning. So where we're going as far as rate rises, you've got a rate rise coming in, I think, this week for the ECB. So they've got to be is it going to be 100 basis points? People are saying, well, no, but there are analysts out there saying we're going to play catch up real quick. And they didn't front load like the Fed.
No.
So they need to really play now. It's got to be, those big licks to try and solve the inflation story.
Well, that's right. And they need to get that the currency, because like it says there, it just fuels inflation and harms growth. So do they go 100 basis points and just go hard, go quickly? We'll see.
Yep, we will see this week.
Similarly, though, it's an interesting chart here where obviously what the euro's doing, but that gas price has come down a huge amount there, which you would hope would augur well for coming into the colder months. But
absolutely,
certainly a big change.
Yeah, very much so. I mean, you can't deny the numbers there, and there was incredibly a lot of hurt there in the middle of the year, and everyone was wondering, 300, 350. Then for a megawatt hour, but then seeing that big crash, we're very worried globally. 25 days of diesel you have in the United States, and the overall diesel supply, which is so important for shipping, for all forms of transportation across the world, and there is a critical shortage as far as diesel and supply chain. So let's look at that one maybe sometime in November, but it's not looking good.
Yeah. So. GDP, US numbers are coming out this week, I believe. Yeah. So once again, we've had 2 quarters of negative growth. They're anticipating it to be positive this quarter, which once again, they say, one of the most resilient people are the American consumers.
Yes.
And they like to spend.
They certainly do. And you're coming into Christmas.
Yeah, that's right. So the back end of the year there. So that number will be positive this week, but we've got a ton of economic data out of the States this week as well.
Yeah, sure. It's a big week. We're watching it by the hour, and our analysts and certainly global traders are really all over it. So it's a bit of fun and games.
And there's been a bit of an inkling there about the Fed's next rate rise, or maybe not the next one, but the one after may not be as aggressive. So
well, that's right.
Are these central banks now starting to consider
putting the hand on the brake a little bit?
Still put rates up, but maybe not as hard.
Yes.
But they still anticipate the next one will be 75 basis points.
Exactly.
Which will then obviously just add to the continued strength of the US dollar.
Yep. So, 2 weeks today we've got the election, and that'll be interesting to see whether it's going to be either it's going to be dramatic as far as the Republicans in power, Congress and Senate, or no one knows, but there are many rumblings out there.
And I think with the midterms as well, historically, not that it repeats, but the share market historically has done very well for the next 6 months following midterms. So, will this be the same case? Who knows? But and just on that, with earnings, obviously we're in the thick of earnings season now. It's a very big week this week in the States for earnings. A lot of the big companies are coming out. This is just a very small snapshot of the some of those the global superstars.
Powerhouses.
Really, they're just earnings juggernauts. All of these companies. But that's showing Amazon obviously a bit more expensive than the others, but
it earns.
It does. They just churn, and they're just earnings powerhouses. And sometimes you have to pay up for that.
You've got to pay because you're looking at future earnings, and that's what it's all about. That's what stock traders are after. I know Meta's been crushed as far as the share price. So, it's all fun and games at the moment for some of those NASDAQ stocks.
Yeah. But it's just looking on the surface there, it certainly makes Apple, Microsoft and Alphabet look attractive at these levels.
Yes,
so
very much so.
Yeah, so you would sort of think if there is a turn in the equity markets, whenever that may be, you would think a ton of money will pour back into these stocks because they're down anywhere between 20 or 30% already. Yeah. And the fundies will be all over that. Yeah. Maybe not this week, but in the coming months.
Well, I hope Robert Kiyosaki's not correct, because he came out last week and said the best we can do is a depression. The worst we can do is a civil war. So he said that last week. So we've got some real interesting, I think, processes working through in the United States, and how the Biden administration manages many different components of their economy.
Yeah, there's a lot of commentary out there though, Pete, isn't there? And a lot of it is a lot of it's clickbait. And
a
lot of think, wow, they're just sort of saying something to
create a reaction.
Yeah.
Anyway, but what happens, it has to traders, their mindset.
But I think this earnings season, especially now that the interest rates have had a reasonable chance to flow through the economy over there, to see what sort of impact that does have. So we'll know that over the next few weeks.
Yeah, going to be fun and games.
Yeah, excellent. Good stuff. All right, thanks for coming in again.
See you soon.
Okay, and that's the XM.com weekly market update.